Yo, check it out, I gotta speak the truth about the hardest working small channel in the crypto.
And just like that, it's Friday again. Welcome back to the CryptoFather channel. Today is the 4th of April. In today's video, on today's agenda, we've got Alabama lawmakers introduce Bitcoin reserve bill as institutional appetite grows. Trader says a move up more likely for Bitcoin as indicators remain bullish. BlackRock and SEC explore next phase of crypto ETFs and closed doors. U.S. House Financial Services Committee passes reintroduced anti-CBDC bill. Ethereum Spectra upgrade set for May following technical hurdles. Democrats warn of stablecoin bailouts as Stable Act passes key vote. South Korea considers opening crypto market to foreign investors, and SEC now closes investigation into Haley Welch's what it means for Hawk. Alabama lawmakers have introduced a bill to allow the state investment in Bitcoin. This follows a string of similar legislations from other states since President Donald Trump's inauguration. The United States regulatory space has recorded several positive moves backing crypto assets. These efforts could swing macro forces and boost global adoption of the asset class. Despite the fact that there is a lot of FUD and a lot of back and forth and the market's going up and down, it seems like the goal is to have a Bitcoin strategic reserve, and it's just a matter of time before that takes shape. State Senator Bill Barfoot introduced a new Senate bill that will give the state treasurer the power to invest in digital assets. A second House Bill 482 was also filed to expedite the legislative process. According to the bill, digital asset investment will not exceed 10% of the fund's balance. While the proposed law does not specifically mention Bitcoin, it restricts all other cryptocurrencies at the time of writing. Only crypto assets with a $750 billion market capitalization in the preceding 12 months are eligible for investments. Currently, only Bitcoins meet this requirement with a market cap of 1.6 trillion. Ethereum and XRP have 213 billion and 115 billion market cap respectively. So that's an interesting loophole they created by basically not specifically targeting Bitcoin. Trader says a move up more likely for Bitcoin as indicators remain bullish. Crypto Capo says that market looks ready to shoot up to between 92 and 98 if it can successfully reclaim the 85 range. I'm not sure if that's accurate. Oh, we didn't look at anything regarding market cap, so maybe let's have a quick look at that. Actually, market cap is a little bit lower than it was yesterday at $2.7 trillion. Yesterday, it was at $2.8 trillion, so this is a little bit lower. $152 billion in trading volume. Bitcoin is presently at $82,000. Ethereum at $1,800. BNB dropped below $600. Solana $116. Cardano is at 64 cents. Ton back down below $4. It was sitting nicely at $4. Now it's back down. Litecoin at $82. And a quick look at Meowcoin. Meowcoin slightly retraced, but the market cap remains pretty stable at $650,000. So that's good. On the charts, Bitcoin is looking, well, I was looking at the charts earlier and I was trying to see what the similarities were between 2024 and now, and of course it's, you know, it's just comparison of patterns, so it's completely irrelevant essentially. But I guess you could kind of like I said before, you could either look at it as a double top right here, which we had in the overall crypto market. You could look at it that way, or you could look at it from the perspective of this being the first top, and we're having the two troughs here, 1, 2, and 3. Then there's another fourth one and a massive retracement. Unfortunately, the retracement is of 50%, which is a huge retracement. And if that were to pan out right here, a 50% retracement right now would mean that we would see a Bitcoin of about, actually it was 55, a Bitcoin of about $48,000, which I see no reason for Bitcoin to go that far down. So I don't think this is going to happen. But the $85,000 that needs to be broken through is right above here. So this is where we're at right now, and we did break above it. So what we need to see is obviously the change in tariffs. Once the tariff situation is settled, that's when we will see probably most likely a bit of a positive sentiment coming back into the markets, because right now the markets are dumping all around. It's not just crypto. The charts are not looking great. Everything is pretty red right now. So that's not looking too good for stocks in general, and of course crypto as well. Charts from Capo is not looking too great, to be honest with you. The prediction that he's throwing out there is that we're supposed to see, or we may see Bitcoin pump. If it breaks above the 85 level, we may see it pump to 92, 98k, and then it's a straight away straight down to hell into the 60s. Yeah, that's the prediction, although I'm not agreeing with that. So because this is a bullish or bear market scenario, rather, this is an assumption that we're going straight into the bear market and that the bull market is over. We've hit the all-time high of $108,000, and that's it. Game over, folks. Time to pack up your bags and go home, as this may be the last time that we see Bitcoin at at above $80,000 or $90,000 for this bull run. And I'm not sure that that's the case, unless if this stretches out to April. We're supposed to see the bull market go all the way into August. Hopefully that resumes, and this prediction is way off, hopefully, but who knows. According to Cap, President Donald Trump's most recent tariffs have already been priced into the market, which means BTC could unexpectedly rise as most investors anticipate a bearish event. If you notice, before Trump came into office, Bitcoin pump, we saw the all-time high before Trump came into office, and then after he did step in, it all dumped. Trump taking office and his pro-crypto stance has been priced into the market prior to him taking office, and this is why we are seeing a dump right now, because that's when profits are taken. But there's something that's supposed to take place in June or July, something major, and so I think right now we're seeing a massive retracement on crypto and everything else, because this is accumulation period for the next upcoming pump. That's what I think is happening, and so the lower prices go, the cheaper it's going to be to scoop them up for those sitting with tons of cash on the sidelines. And going to see another massive run up soon in the next few months. BlackRock and SEC explore the next phase of crypto ETFs in closed door task force meeting. BlackRock met with the SEC's new crypto task force on April 1st to discuss ETF mechanics and the future of redemption models. BlackRock and the US Securities and Exchange Commission met this week to discuss potential changes to crypto exchange traded products workflows, including transitioning to in-kind redemptions for digital asset funds. Now, if you don't know what in-kind redemption for digital asset funds means, neither do I. So I took the time to look it up. New investors often envision receiving big cash payouts when they sell their securities at a profit. But what happens when the fund you're withdrawing from isn't enjoying net inflows of capital? This isn't something most new investors think about when buying mutual funds or exchange-traded ETFs. However, this scenario is extremely common, and the process for addressing it is usually spelled out in the fund's prospectus, which I assume that some people may not actually read through. When a fund is experiencing a net outflow of capital, there is more redemption requests than capital inflows from new investors. Investments must be sold to raise money. This is especially the case when the fund's managers believe that honoring redemptions would endanger the investment of long-term investors who remain in the fund. In-kind redemptions seek to address this issue by offering investors leaving the fund a payment other than cash, usually securities or other forms of property, or on a pro rata basis. While this scenario describes what would happen if a fund experiences a cash crunch, exchange-traded funds are set up this way regardless of inflows. In other words, in-kind redemptions are a fundamental feature of the ETF asset class. The most common type of in-kind distribution occurs when a company pays a dividend in stock rather than in cash. Additionally, some funds pay out distributions in kind after a certain threshold. For example, if an investor redeems shares over a allotted threshold, the remainder of the redemption values are paid in kind, usually with shares of the fund. This lowers the tax penalty in the event of high redemption activity. So buying ETFs is a lot easier than taking them out. Basically, when you buy ETFs, you throw your money in at the likes of BlackRock, but in order to cash out, you don't actually get cash in return. You get a bunch of other things that you then have to figure out how to sell and how to redeem for cash. When an investor wants to redeem ETF shares, the distributor usually exchanges the shares to be redeemed for a basket of securities held by the ETF. Only authorized participants, a form of institutional investor, may redeem shares directly from an ETF. These investors are also able to contribute securities to a fund in exchange for newly issued ETF shares. Retail investors, on the other hand, can only buy and sell ETF shares through a broker. So the system is designed to keep your cash in and make it as difficult as possible to prevent people from cashing out actual money. And so they are handed down from place to place and given out notes in the form of either company shares or baskets of securities, but never really cash until, I guess, the final step. In all cases where ETFs make in-kind redemptions, the fund never has to sell securities to generate cash. As such, it avoids generating taxable gains for non-redeeming shareholders. ETFs can also use this redemption mechanism to remove capital gains and permit non-redeeming shareholders to defer taxes on their gains. So ETFs are a complicated financial mechanism, and you really need to understand what you're getting yourself into if you want to invest into ETFs. It's a lot easier to invest into Bitcoin and crypto, but of course that also has its risks, which you as an investor need to educate yourself on and read those 52-page long pamphlets or prospectuses. Going back to the BlackRock SEC article, in-kind redemptions allow authorized participants to exchange ETF shares directly for the underlying assets such as Bitcoin instead of cash, improving efficiency and reducing costs. The meeting signals that such redemptions may be gaining regulatory traction. So I guess this would be a positive in that if authorized participants, whatever that means, I guess, people or entities with big deep pockets, if they were to cash out their ETFs, instead of getting cash, they would be given Bitcoin, actual possession of Bitcoin, which I guess would ultimately increase the use of Bitcoin and quite possibly its price. Since approving spot Bitcoin ETFs in January of 2024, the SEC has mandated cash-only redemption models, citing custody and compliance risks. So the new redeem in kind redemptions is definitely a move in, I guess, the protection of institutions like BlackRock from having to pay more taxes on the capital gains. U.S. House Financial Services Committee passes reintroduced anti-CBDC bill. They recently approved the Anti-CBDC Surveillance State Act with 27 members voting in favor of it, while 22 opposed it. Most of those who supported the bill believed it would help Americans retain their power over their digital currency, reinforcing traditional American values of privacy and individual sovereignty, which is basically the idea, and the exact opposite of happens if you introduce CBDCs. Privacy goes out the window. So keep on the good fight. Ethereum's Spectra upgrade set for May following technical hurdles. Spectra, one of Ethereum's largest upgrades since transitioning to a proof-of-stake consensus mechanism in 2022, is now set to hit the Ethereum mainnet on May 7th. Are we going to see a pump for Bitcoin, for Ethereum? You would expect so, but with the most recent lackluster in anything related to fundamental, to pumpage, to crypto hopium, it's hard to say. I mean, we should have seen massive pumps from Elon Musk announcing that he is now the Doge father, and Doge has not moved at all. Originally scheduled for March 2025 release, Spectra was delayed due to finality issues on the Holesky testnet, but has been running without major incidents on the Hoodie testnet that was spun up in response to the testnet issues. The upgrade also experienced a major issue on the Sepolia testnet in early March, but it was later identified and fixed. Spectra's upgrade is set to bring a handful of notable changes for Ethereum, including boosting the network's scalability, increasing validator staking limits from 30 ETH to 2048 ETH. That is massive. So right now, I guess, even 32 ETH is quite a nice chunk of ETH. But so what is going to happen to all the other validators that are running their validator nodes on 30 ETH. Will they have to shut down? Will they have to merge? But 2048 ETH is a huge number huge jump compared to, you know, from 32 to 2048. So that's going to limit the number of validator nodes out there, obviously, and it's going to open doors either to institutions forming in which I guess people will be able to pool their ETH in order to create a validator node, or we'll see whales controlling the entire system. However, for active participants on Ethereum's network, the most recognizable change may be the introduction of account abstraction, which will allow users to pay for gas or transaction fees with multiple tokens like stablecoins in addition to ETH. So you no longer will have to pay in ETH. You'll be able to choose what form of payment will cover your gas fee for the transactions. The upgrade will also clear a path for improved wallet functionality for users, including potential implementation of social recovery, which is a more user-friendly restoration process for lost wallet seed phrases, something that should help with a diminishing number of Ethereum, although that's not necessarily a bad thing, because that's like burning your ETH, right? Which lowers the overall circulation and ultimately increases the price tag for that puppy. Democrats warn of stablecoin bailouts as Stable Act passes key vote. The years-long fight to approve stablecoin legislation in the US crossed a monumental milestone as the Stable Act passed the House Financial Services Committee Wednesday by a vote of 32 to 17. Of course, there are fears that stablecoins are not as stable as they should be, based on, you know, as their namesake insinuates they should be. We've had the failures of the USDC, lost its peg after the Silicon Valley Bank looked like it was set to fail. Then the Circle, the USDC stablecoin issuer, had 3.3 billion at SVB at that time. The FDIC stepped in and backstopped all deposits, and USDC regained its peg after falling below 90 cents. Then we've got Terra Luna, which also caused a massive crash in the crypto space. So there are fears of stablecoins, the Stablecoin Act, not being as stable as one would expect it to be. Some good news from Korea, I think. South Korea considers opening crypto market to foreign investors. Now, this should be interesting, because if they allow for that, I mean, they could put limitations on who can actually invest. This could potentially further open the doors to allowing regular Joes like myself to start investing in crypto in South Korea, because right now foreigners are banned from investing in South Korean exchanges, and we have no access to any of the Korean exchanges here. So that's a bummer. But so considering opening crypto market to foreign investors would mean exactly that. I guess foreign investors would insinuate, I mean, in my mind, it's probably people from abroad who are trying to invest in cryptocurrency exchanges in South Korea, just like you can invest in Binance that is located anywhere in the world, right? But in Korea, that is not the case. But so this could be the door to salvation for all of us here. For 2025, South Korea's financial watchdog has unveiled plans to potentially welcome foreign investors into its domestic cryptocurrency sphere, making a departure from its traditionally conservative stance on digital asset trading. Up until a few years ago, I think 2020, maybe 19, I don't know, anybody was able to invest into cryptocurrencies. That's how I started trading crypto in South Korea through Corbit. And of course, later on, that was changed because of the real name verifications. And right now, sending crypto out of Korean exchanges has completely been banned. It's like impossible because they deleted Google verification. Now you can only do it for 4. But the major hurdle is the real name authentication process. You need to be a Korean citizen in order to trade cryptocurrencies in South Korea, and so that's a massive roadblock for any expat or any foreigner who is non-Korean, who doesn't have a Korean passport, to trade cryptocurrencies in South Korea. Speaking at a National Assembly gathering, Kim Song-jin, who heads the Financial Services Commission's Virtual Asset Division, outlined the regulator's vision for international market participation, albeit with robust safeguards in place. So I'm sure that there's going to be further roadblocks, but having that first crack in the door open so you could shove your little toe inside and start trading in South Korea without having to go through your spouse, your Korean spouse, or whoever else knows what is done. That would be a major step forward. The proposed regulatory evolution hinges crucially on domestic exchanges bolstering their anti-money laundering protocols. Of particular importance is the comprehensive implementation of the travel rule, a mechanism requiring detailed documentation for digital asset transfers exceeding 1 million Korean won. This is in place right now, but it's hard to withdraw any amount of money if you don't have a Korean name. Right now, it's virtually impossible because of the removal of Google's two-factor authentication. Very unfortunate. The current framework presents considerable hurdles for overseas participants, with regulations mandating Korean bank accounts linked to verified identities for cryptocurrency trading. This requirement has effectively cordoned off the market from international engagement, creating what industry observers term the kimchi premium, a notable price disparity between Korean and international exchanges. Although the Korean kimchi premium has not been present very much. I mean, in the past we saw kimchi premium of 10%, and right now there's barely 1%, or even less than that in most cases, and it doesn't occur as often, as frequently as it did in the past. But Peter Chung suggests that introducing foreigners to the crypto market in South Korea could catalyze a significant market development, particularly in the realm of US dollar-pegged stablecoins. The anticipated influx of global traders could potentially dissolve the price premium that has long characterized the Korean crypto landscape. But so we're going to have to wait and see what will be done in that aspect. And Haktua Girl, the SEC now closes investigation into Haley Welch, what it means for Huck. I guess she can be back on social media without having to fear for her life. The world of cryptocurrency has been rife with excitement and speculation, especially surrounding new projects and influencers. One such influencer, Haley Welch, has recently been in the spotlight due to the US Security and Exchange Commission investigation into her alleged involvement in the Huck Meowcoin's rug pull. Millions of dollars were pulled away from people, and I guess she has been cleared of it now. She has distanced herself from the company that conducted the rug and says that she had nothing to do with it, and the SEC has cleared a way for her to return to her regular social life. So are we going to see more of the Haktua Girl? And I think I saw a bit of an interview in which she said obviously she doesn't want to be labeled as the Haktua Girl for the rest of her life, because who would want to be the Haktua Girl? Moving forward, Haley Welch's career trajectory could see a shift. Obviously, she should seek a shift herself. But so good for her. Congratulations. Make sure to remember, smash the likes on this video, subscribe to the channel, pick up a Descent wallet. You can get one right now for a discount of $30. If you buy a bundle of 2, you get them for a $99 discount. All of that with the ref link below the video. Check out all the other videos on the channel, because I provide a lot of videos on how to maximize your crypto profits. Check out the AI Go Trade app that I've been talking about. I made a couple of videos about it yesterday. The AI X trading. Pay attention to Telegram, because Telegram is huge. It's a growing ecosystem. There's a lot of potential on it, a lot of scams, of course, as well. So you always have to be aware of that. But when it comes to storing crypto, Descent wallet has got you covered. The best biometric wallet. Check that out. Pick one up, pick up 2, pick up a dozen. Whatever you do share the video with a wider audience, and come back on Monday, I guess, because the weekend is kind of a lull for me. So I will see you then. Thank you for tuning in. Thank you for your time. Thank you for your support. See you in the next one. Peace.